All right, so, like, imagine this. You're at the grocery store, right? And suddenly your favorite imported coffee, it's way more expensive than last week.
Oof, I can feel my wallet hurting already.
Exactly. And then, to make things worse, you hear that the country where that coffee comes from, well, they've decided to slap an extra tax on, I don't know, those American snacks you love.
Oh, so it's like a trade war playing out in the aisles of the supermarket.
Yeah, kind of. And it's not just coffee and snacks. This is happening on a global scale right now with all sorts of goods. And that's what we're diving into today, how these reciprocal tariffs, as they're being called, are shaking things up.
You know, it's funny, most people hear tariffs and their eyes glaze over, but it really does hit close to home for everyone.
For sure. So whether you're worried about your savings or just trying to figure out why prices are going haywire, this deep dive is for you.
Absolutely. We've been poring over news articles, financial reports, all that good stuff to get a handle on this.
So let's get down to brass tacks. What exactly triggered this whole tariff situation?
Well, the big news came in April 2025 when the U.S. announced these reciprocal tariffs. It's basically a total shift in how international trade works.
Okay, so can we break that down a little? What does reciprocal tariffs actually mean in plain English?
Sure. In the simplest terms, it means the U.S. is putting new taxes on goods coming in from, get this, something like 180 different countries.
Wow, 180. That's almost everyone.
Pretty much.
Okay.
And as you can imagine, a lot of those countries aren't too happy about it and have started putting their own taxes on U.S. goods in retaliation. It's a full-blown trade dispute.
Okay, but why now? Why did the U.S. suddenly decide to do this?
Well, one of the main drivers is the trade deficit. The U.S. is importing way more than it's been exporting to the tune of $1.2 trillion.
So these tariffs are basically an attempt to even the playing field.
Yeah, you could say that. The idea is to encourage American companies to produce more domestically and to, well, maybe discourage people from buying so many imported goods.
But hold on, didn't this cause, like, a huge freak out in the markets?
Oh, yeah. The markets definitely took notice. The S&P 500, one of the major U.S. stock indexes, had its worst week since the COVID pandemic back in, what was it, 2020? It dropped over 10%.
Ouch, that's gotta hurt.
And the Nasdaq, another big index, is officially in what's called a bear market, meaning it's down 23% from its highest point this year. That's not a good sign.
Not good at all. So this wasn't just an American problem either, right? I mean, we're talking global impact here.
Absolutely. According to Bloomberg, something like $6 trillion in global equity value just vanished when these tariffs were announced.
Whoa, that's a lot of money to just disappear.
It really shows you the scale of this thing
Yeah.
and how interconnected the global economy is. Any big shockwave in one place is going to send ripples everywhere.
So we've talked about the stock market, but what about other parts of the financial system, like currencies?
Yeah, currencies are feeling the heat too. We've seen a lot of investors pulling money out of countries like China, those in Europe, and some developing nations too.
I guess when things get uncertain, people want to put their money where it feels safe.
Exactly. They're looking for stability and trying to minimize their risk. But it's not just about stock markets and currencies. We're seeing effects ripple out to other parts of the economy too.
Interesting. Give me an example.
Okay, so think about shipping, right? The cost of moving goods around the world actually went down. The Drury Index, that's the one that tracks container shipping prices, it dropped by almost 6%.
So less trade means cheaper shipping. That's counterintuitive.
Yeah, a little bit, but it makes sense when you think about it. Less demand for shipping means lower prices. And then there's oil. The price of oil plummeted to a 3-year low.
Really? Oil, that's a big deal.
Huge deal. A lot of that is tied to concerns about the global economy slowing down because of these tariffs. Less economic activity often means less demand for oil.
Okay, but what about safe havens, like gold? Didn't people rush to buy gold during the pandemic?
You'd think so, right? But gold only dipped slightly. It's a little puzzling, but it might be a sign that investors are still cautious, but not panicking just yet.
Interesting. So it's clear that these tariffs are having a big impact, but are other countries just sitting back and taking it?
Oh no, not at all.
Well,
Remember, these are reciprocal tariffs. It's a back and forth.
right. So what are some examples of how other countries are hitting back?
Well, China, for example, didn't waste any time. They immediately slapped a 34% tariff on all goods coming from the U.S.
Whoa, 34%. That's a serious counterpunch.
It is. It sends a very clear message. And it's going to have a real impact on businesses in both countries.
Yeah, it's like this tit-for-tat trade war is just escalating. And what about other countries? What are they doing?
So Canada, they decided to target the U.S. auto industry specifically. They put in a 25% tax on cars imported from the U.S.
That's got a sting for American car makers.
Yeah, it's definitely a strategic move by Canada.
Yeah.
And they're reportedly using the money they collect from this tariff to support their own domestic car industry.
Interesting. So it's not just about retaliation, it's about trying to gain an advantage in this new trade landscape.
Exactly. And it's not just individual countries reacting either. We're seeing major economic blocs like the European Union, with Germany and France and countries in Southeast Asia, part of ASEAN and Brazil. They're all figuring out their next move.
So what are their options? What can they do?
Well, some are thinking about going through the World Trade Organization, the WTO, to challenge these tariffs. Others are considering their own sets of counter tariffs. It's a really complex situation, and it's hard to predict how it's all going to shake out.
So lots of moving pieces on the global stage. But let's bring it back down to earth for a second. What about the folks who control the money, the central banks? What are they doing in all of this?
Right, the central banks, they're the ones who set interest rates and try to keep the economy running smoothly. It's complicated stuff, but it affects all of us.
Okay, so let's start with the U.S. What's the Federal Reserve, the Fed, doing?
Well, before these tariffs, there was talk that they might start lowering interest rates to, boost the economy.
That makes sense. Lower interest rates usually mean it's cheaper to borrow money, so businesses can invest and grow.
Yeah. But here's the thing. We're still seeing prices go up, inflation. Core inflation is sitting at 3.8%, and unemployment went up a little to 4.2%.
So it's a mixed bag, some good signs and some bad signs. And I bet those tariffs aren't helping, right?
Not at all. The Fed chair himself has said that these tariffs could actually make inflation worse. So now they're in a tough spot.
Yeah, I see the dilemma. Lower rates to help the economy, but maybe make inflation worse. Or keep rates higher to fight inflation, but risk slowing down the economy. Tricky.
Very tricky. So for now, it looks like they're going to hold off on any rate cuts until things become a little clearer, maybe later this year.
Okay, so that's the U.S. What about Europe? What's the European Central Bank doing?
Well, Europe's in a bit of a different situation. Their economy isn't growing very fast, but they're not seeing as much inflation as the U.S.
So they've got a little more breathing room.
Yeah, you could say that. So it's looking like they might actually start lowering rates pretty soon, maybe even as early as July. It's interesting how different regions are responding to this global situation in their own ways.
Makes sense. It's not a one-size-fits-all situation. And what about Brazil? I know they've been lowering rates recently, too.
They have. But now with these tariffs, there's a worry that inflation might pick up again. And Brazilian farmers are already dealing with high costs and limited access to credit.
Oof, that's a lot to juggle for their central bank.
It is. They'll have to be very careful about how they manage interest rates going forward.
All right, and finally, what about China? They're obviously a major player in all of this.
Yeah, for sure. The People's Bank of China, that's their central bank. They're not changing interest rates much right now. Instead, they're trying to help their economy by putting more money into the financial system.
So they're trying to stimulate things in a different way.
Exactly. Their goal is to encourage people to spend and invest more, especially within China, to make up for any potential losses from fewer exports.
Okay, so we've covered a lot of ground here. Tariffs, markets, central banks, all pretty complex stuff. But let's zoom in on what all this means for the average person. Like, how are these tariffs going to affect what we pay for things?
Right. Let's get down to the nitty-gritty, the wallet impact.
Yeah.
So in the U.S., get ready for potentially higher prices on a lot of imported goods.
Oh, no. So like everything from clothes to electronics.
Possibly, yeah. These tariffs are essentially an extra cost for companies that import things, and it's highly likely that they're going to pass at least some of that cost on to consumers.
Makes sense, but not exactly good news for shoppers.
Not really. And it's especially tough because prices for essentials like housing and healthcare are already so high. This could really squeeze household budgets.
Definitely something to keep an eye on. And what about price changes in other parts of the world?
Well, in Europe, food prices are still pretty high, partly due to bad weather affecting harvests, but energy prices have been more stable. So it's a mixed bag there, too.
Okay. And what about emerging economies? I'm thinking places like India, for example.
In a lot of those countries, prices for everyday things were already going up, and these tariffs probably won't help.
Right. And in Latin America.
The expectation is for more inflation there throughout the year, especially in countries like Chile and Brazil.
All right. So it sounds like higher prices might be a global trend. Making me think about my investments. Where's the smart money going in this kind of environment?
That's a good question. We've already seen big drops in the value of U.S. tech companies and other growth stocks, companies that are expected to grow rapidly.
Makes sense. If the economy is slowing down, people might be less willing to invest in risky high-growth companies.
Right. And some sectors have been hit particularly hard. Semiconductors, which are used in everything from phones to cars, are down about 26%.
Wow, that's a lot.
Yeah, and car manufacturers are down around 21%. And companies that make things people buy for fun, discretionary spending, those are down about 17%.
So people are getting more cautious about where they spend their money.
Definitely. And the VIX, that market fear gauge, it's jumped up to levels we haven't seen since the start of the pandemic.
Not exactly a vote of confidence.
Not at all. And a lot of analysts are lowering their expectations for how much profit companies are going to make this year, and they're blaming it directly on these tariffs.
So is there anywhere that looks promising for investors? Or is it just a matter of battening down the hatches and waiting for the storm to pass?
Well, there are a few potential bright spots. Some countries, particularly those that export raw materials that aren't being taxed by the U.S., might actually benefit a bit. Brazil is one example.
Okay, so some emerging markets might offer some opportunities?
Possibly. But it's important to remember that a lot depends on how things develop. If the trade war escalates, it's going to be a tough environment for everyone.
Yeah, no one wins in a trade war. So what are some of the safer bets right now?
Well, when there's uncertainty, investors often flock to what are considered safe haven assets. U.S. Treasury bonds are a good example. Their prices have gone up, and their interest rates have gone down.
Why is that considered safe?
Because they're backed by the U.S. government, which is seen as very reliable. It's a way for investors to park their money and ride out the storm.
Makes sense. So U.S. bonds are looking good. What about the U.S. dollar itself?
The dollar's getting stronger, too, as people see it as a safe haven currency. But it's not just about stocks and bonds. We're seeing interesting things happening in the commodity markets, too. For example, the price of copper has gone down.
Copper. Why is that?
Well, copper is used in a lot of construction and electronics. And people are worried that demand for those things will slow down if the global economy weakens.
Makes sense. But I did read that nickel prices are up.
You're right. Nickel is kind of a special case. Indonesia, a major nickel producer, has been limiting their exports, and there's a huge demand for nickel for electric car batteries.
Ah, so it's a supply and demand issue. Even in a global slowdown, some things can still go up in price.
Exactly. It's a reminder that there are always specific factors at play within the bigger economic picture. And speaking of specific factors, let's not forget about agriculture.
Right, what's happening with food prices?
Well, we're seeing lower prices for some U.S. crops like soybeans and wheat because China is expected to buy less from the U.S. because of the tariffs.
So that's good for American consumers, but probably not great for American farmers.
Yeah, it's a mixed bag there too. But on the flip side, in Brazil, the market for things like tomatoes is booming.
Wow, so even in a trade war, there are winners and losers.
Exactly. It all comes down to how individual countries and industries are positioned in this new global trade landscape. And look, even Bitcoin, the cryptocurrency, has been affected. It's down along with everything else.
So no one is immune to these global shifts.
Nope. When there's this much uncertainty in the global economy, everything gets impacted.
Okay, so let's wrap this up. It sounds like these tariffs are a really big deal, and they're going to have a lasting impact on how the global economy works. We're looking at potentially higher prices, a lot of uncertainty for investors, and central banks all around the world trying to navigate these choppy waters. Anything else you'd add?
I think you summed it up perfectly. It's a very complex situation, and the long-term consequences are still unfolding.
Absolutely. It's a lot to digest. But here's something I keep thinking about. How might all these changes in global trade ultimately change the types of jobs we have and the kinds of products we use in the future? It's a big question, but I think it's worth pondering. Thanks for joining me on this deep dive.
Thanks for having me.
And to our listeners, stay informed and stay curious. We'll be back soon with another deep dive.